why NIO stock is set to surge. Future of the top 16 automakers. The global automotive industry is at a turning point. For over a century, gas-powered cars dominated the market, with legacy automakers like Toyota, Volkswagen, Ford, and General Motors leading the way. But today, we re-witnessing one of the biggest industrial shifts of our lifetime, the transition to electric vehicles. Governments are mandating stricter emission laws, consumers are demanding cleaner technologies, and innovation is moving at lightning speed. This shift has created an environment where new players, like NIO, are not only competing with the giants, but have the potential to outpace them. Electric vehicles are no longer a niche market. Projections show that by 2030, EVs could account for more than half of all cars sold worldwide. Countries like Norway are already phasing out gas-powered vehicles, while China, the largest auto market in the world, is leading in EV adoption. Against this backdrop, Tesla became the poster child of EV success. Yet the story doesn't stop there. NIO, often referred to as the Tesla of China, is emerging as a contender with unique strengths that could make its stock one of the most exciting opportunities in the sector. To understand why NIO could surge, we first need to look at its foundation. Founded in 2014, NIO started with a vision of creating premium electric vehicles that combine performance, technology, and luxury. Unlike many startups, NIO didn't just try to copy Tesla's formula. Instead, it introduced innovations that set it apart, most notably its battery swapping technology. While most EV makers focus on fast charging, NIO designed stations where drivers can swap their depleted battery for a fully charged one in under 5 minutes. This feature solves one of the biggest barriers to EV adoption: charging time and convenience. China, where NIO is headquartered, offers fertile ground for this model. It is the world's largest EV market, with millions of EVs sold each year. By building a network of battery swapping stations, NIO is creating an ecosystem that ties customers to its brand. It's not just selling cars, it's selling a lifestyle and infrastructure. As this network expands, NIO gains a competitive moat that's difficult for rivals to replicate quickly. Now, let's compare NIO with the top 16 automakers worldwide. Companies like Toyota, Volkswagen, BMW, Mercedes-Benz, Ford, and GM have decades of experience, massive supply chains, and global brand recognition. But they also face a challenge: transitioning from combustion engines to electric vehicles. Their factories, labor forces, and dealer networks were built for the old era, and shifting to EVs requires billions in investments and years of restructuring. Tesla, meanwhile, had the advantage of starting fresh, building its infrastructure entirely around EVs. That's why it surged ahead and captured a dominant position. NIO is in a similar position today. It doesn't carry the baggage of outdated manufacturing systems. Instead, it's building an agile business model focused solely on EVs, just as Tesla did a decade ago. Among the top 16 automakers, Volkswagen has committed heavily to EVs, with its ID series gaining traction. Toyota, once reluctant, is finally making larger EV investments. GM has pledged an all-electric future by 2035. BMW and Mercedes are doubling down on electric luxury sedans and SUVs. And then there's BYD, another Chinese automaker that has quickly grown into Tesla's biggest rival in terms of sales volume. Against all these giants, NIO stands out for its combination of luxury positioning, innovative infrastructure, and global expansion strategy. NIO's global vision is already in motion. It has entered markets in Europe, beginning with Norway, one of the most EV-friendly countries in the world. From there, it plans to expand to Germany, Denmark, the Netherlands, and eventually the US. This strategy is crucial because Europe is one of the fastest-growing EV markets, and breaking into it gives NIO a chance to position itself alongside the established luxury brands. Now, let's talk about why NIO's stock could surge. Currently, NIO's valuation reflects both optimism and skepticism. On one hand, investors see potential in its technology, brand, and market expansion. On the other, challenges like production slowdowns, supply chain issues, and macroeconomic pressures in China have weighed on its stock price. However, many analysts believe that as NIO scales production, expands its battery swapping network, and grows its international presence, the company will see strong revenue growth and improving margins. China's support for EVs also works in NIO's favor. The Chinese government has provided subsidies, infrastructure investments, and favorable policies to encourage EV adoption. Unlike some Western markets, where regulations are still catching up, China has embraced EVs as a central part of its industrial strategy. NIO benefits directly from this ecosystem, giving it a home field advantage against foreign competitors. Looking at the bigger picture, the shift to EVs is not just about cars. It's about energy, sustainability, and the future of mobility. Automakers that fail to adapt risk losing relevance. That's why companies like Ford and GM are pouring billions into their EV divisions. But while they play catch-up, NIO is already carving out its share of the market. It has brand loyalty, unique technology, and a product lineup that appeals to consumers looking for premium EVs. At the same time, it's important to recognize the risks. NIO is not without challenges. The EV market is becoming crowded, with competition from Tesla, BYD, and traditional automakers. Global supply chains, especially for batteries and semiconductors, remain vulnerable. Regulatory issues, especially regarding Chinese companies expanding into Western markets, could also pose hurdles. And like any growth company, NIO faces pressure to deliver consistent results quarter after quarter. Still, many investors see these challenges as growing pains rather than roadblocks. The long-term trend is clear. EV adoption is accelerating, and companies with strong innovation and strategy will thrive. NIO has positioned itself as one of those companies. Its battery swapping technology could be a game changer. Its European expansion is opening new doors, and its brand is gaining recognition beyond China. When we look back at Tesla's rise, it faced many of the same doubts NIO faces today. Investors questioned its ability to scale, compete, and survive in a market dominated by giants. Yet those who believed early in Tesla's vision saw massive returns. While NIO's path won't be identical, the parallels are striking. The opportunity to get in before mass adoption and global expansion takes full effect is what excites many about NIO stock. The future of the top 16 automakers will be defined by how they adapt to electrification. Some will thrive, others may decline. But NIO, as a pure EV company with innovative technology and a strong home market, is uniquely positioned to benefit from this transformation. For investors, this makes NIO a stock worth watching closely. In conclusion, the auto industry is undergoing its biggest disruption in a century. Electric vehicles are the future, and NIO is building the tools, infrastructure, and brand to secure its place among the world's leading automakers. While risks remain, the potential rewards are significant. NIO is not just another car company. It's a vision for the future of mobility. And that's why its stock could be set to surge as the world shifts toward an all-electric future.